Hello, fellow Canadian investors. I am Justin from Tater, and in this video, we are going to cover some basic principles for buying and selling ETFs. The brokerage we will be using in this case is Questrade. First, we will focus on purchasing ETFs. We have already logged into Questrade, and we have clicked on the account with which we would like to execute this trade. In this example, we will show you how to buy XIC, the iShares Core S&P TSX Composite ETF. And just looking up the fact sheet is always a good idea just to verify the correct name for the security. Then we can hop back over to Questrade and we will enter XIC into the search bar. You can see xic.to pop up, and the .to just means that it is bought and sold on the Toronto Stock Exchange. We'll just verify that the name looks correct as well, the iShares Core S&P/TSX Composite ETF, and then the TSX in the brackets just means that it's bought and sold on the Toronto Stock Exchange as well. So we are good. This is definitely the ETF we would like to purchase, so we will just scroll down and click on buy. And just a note, we are showing single page order entry as opposed to the multi-page option available in Questrade. So this is the page you arrive at after clicking on buy. The sale order doesn't go through immediately. There are a few more steps required before the actual purchase occurs. Now there are a couple of distinct order types that we need to discuss in further detail. The first on the list is market order, where you can generally buy and sell securities at the best price available in the current market, provided that it's open. The problem is that market orders don't guarantee a specific price. They ensure that your trade gets executed promptly, but you may end up paying more than you anticipated for a buy order or receiving less than you would like for a sell order. We won't get into the minutia of why right now, but the gist of it is that market orders are the quickest and easiest, but generally not the best. We recommend using limit orders for all trades, whether it's a buy or a sell. A limit order allows you to set a maximum price you're willing to pay when buying securities and a minimum price you are willing to accept when executing sell orders. Limit orders ensure that if your order is executed, it will be at the limit price you specify or even better. What limit orders do not do is ensure that the order actually gets filled. For our purposes, we want the order to go through right away, so we're going to cover some guidelines to help make this happen. First, some definitions. The bid price represents how much investors are willing to pay for a specific security. The ask price is defined as the price at which investors are willing to sell. Okay, now for the guidelines. If possible, only trade between 10:30 a.m. and 3 p.m. Eastern Standard Time. Markets are open from 9:30 a.m. to 4 p.m. However, the first and last hour of the trading day are generally much more volatile, which means prices of securities are changing more significantly and the trade you are seeking may not actually get executed, even when you are trying to execute a limit order. Next, when buying a security, enter the ask price or even 1 or 2 cents above that. This will generally ensure that the order gets executed right away. And don't worry, you will receive the best price available at the time of the transaction. So entering a price above the ask price doesn't really have any inherent risk. It just helps ensure that the order gets executed right away. The same principle holds true when selling. You will want to enter the bid price or even slightly less. As with a buy order, you will receive the best available price and the order should go through immediately. If investors try and get fancy and enter a price that is better than the bid or ask price, then the order just might not get filled. An example would be if you enter a price lower than the current ask price when you're going to buy a security, the security could go up in value significantly and just keep going up so that you will never end up being able to get in at that position, that original price that you were trying to beat. It is also a good rule of thumb not to make any trades during U.S. holidays. The Canadian market is open on days like Martin Luther King Day, Memorial Day, and July 4th, but if you're trying to buy or sell a security with international or U.S. holdings, it's generally not recommended since when the markets are closed, you can see more volatility and there could be issues with liquidity. We won't beat that drum any further. It's just best not to transact on U.S. holidays. So let's hop back over to Questrade and continue our buy order for XIC. Under order type, we are going to click limit as we just discussed. Then under quantity, we'll just select 1 share for this example. And then down under limit price, we are going to select a price equivalent or 1 or 2 cents above the ask price. So in this example, we'll just select the equivalent to the ask price, $30.02. Once those 3 steps are complete, we are going to scroll down and click next. Prior to clicking on place order, you should just scroll up to do a quick review of the entire order. So we are buying 1 share of XIC at $30.02. It is a limit order and the duration is good till canceled, which doesn't matter as we expect it to go through right away. So we can scroll down and click on place order. At that point, we could reasonably expect the order to go through immediately, as long as the aforementioned steps were taken, setting the order type to limit, setting the price to the equivalent or a little bit above of the ask price, and transacting between 10:30 a.m. and 3 p.m. Eastern Standard Time, when markets were open on a non-North American holiday. Okay, so next up we will show you how to sell an ETF, and as before, the platform we are going to use is Questrade. For this example, we are going to be selling ZAG, Z-A-G. This is the BMO Aggregate Bond Index ETF. So there are a couple of different ways to do this. We can scroll down and find this ETF in our portfolio. We'll want to ensure that we click on positions. This will show the number of units or shares for each security that we possess. So we scroll down, we can find ZAG and click on that. And we'll get to this screen where we'll just scroll down a little bit further to go click on sell. So we can do it that way, or if we go back, we can simply enter ZAG into the search bar. We will, of course, want to make sure we are selecting and selling the correct ETF, and we showed you how to look up the fact sheet for this ETF and XIC in the previous example. So we can be pretty confident that this is the correct ETF, but when selling, it is probably best to go the previous route and just scroll down to find the ETF you would like to sell in your portfolio, just to ensure you are not selling the incorrect one. Once we have located ZAG, the ETF we would like to sell, we will just ensure that row is highlighted and we will click on it to bring up this next page where we will scroll down and just click on sell. That will bring up the order page, and again we have selected single page order entry. So we will scroll down and under order type we will of course click limit as we always do. Under quantity, for this example, we will just select 1. And then down under limit price, we are going to want to select a price that is equivalent or a little bit below the bid price. So in this case, $13.06 should be sufficient. We will then scroll down and click on next. We are going to then need to scroll up a little bit just to review the order. So we are selling 1 share of ZAG at $13.06. It's a limit order. And once again, the order duration, not very important as we expect this order to be executed just about immediately. Note the commission and fees associated with this trade. We will dive into those details momentarily. At this stage, you would move your cursor down over the place order button to execute the trade, and you could reasonably assume that the trade would be executed right away. So before we wrap up this section, let's dive into the details behind the commission and fees. We can learn a little bit more about these costs right on the Questrade website. You can just Google Questrade commission and fees like we've done here, and you will get to the pricing page. From there, we will just click on See Pricing, where we will get to this next page, which if we look at the middle section, it focuses on buying and selling ETFs, which is, of course, what we do. So Questrade offers commission-free purchases of ETFs, and for sell orders, they charge 1 cent per share, a minimum charge of $4.95 up to a maximum of $9.95. Now, when it comes to costs, commissions do not tell the entire story. If we scroll down to about halfway through this page, just past the margin section, we can get the full transparency section where they discuss a little bit more about the fees. Now, these exchange fees or electronic communication network ECNs are relatively small fees. However, they can amount to something somewhat significant for larger transactions. So we will look at an example in a minute, but for now, let's click on Get Details so we can see a little bit more about what these fees actually are. As you can see, we've arrived at the transaction fees page, so we will just scroll down a little bit to where we get to see what the ECN fees are. So when you are adding liquidity, that means you are placing a limit order that is not expected or not likely to be filled immediately. So there are no ECN fees for most of those types of transactions, but they are not the types of trades we are making. We are looking to have our orders executed right away, which means we are removing liquidity from the market. So there will be ECN fees associated with our trades. However, as you can see, the vast majority of our trades will be Canadian securities, ETFs where the share price is above $1. So in this case, the cost is 0.0035 cents per share. And the cost for trading US securities is pretty similar. So these are fairly negligible costs in the grand scheme of things, but they can add up, especially for larger transactions. So let's look at an example where we want to purchase $100,000 worth of ZAG, the BMO Aggregate Bond Index ETF. If you recall, the share price was about $13. So we will determine the number of shares to purchase by dividing $100,000 by the share price of 13. So about 7,692 shares. The ECN fee again is 0.0035 cents per share. So determining the total ECN fee, we will multiply the total number of shares we are purchasing by the ECN fee per share. So the total ECN fee for this transaction will be $26.92, somewhat significant, but if we look at this number as a percentage of the overall cash we are investing, it is pretty small. Let's divide this ECN fee by the total amount of cash we are investing in this case, so $100,000. The result is 0.0269%. This is, of course, a very small fraction of the overall trade we are making, and certainly a much smaller fee than those charged by the banks and brokerages for the robo-advisor portfolios. Another example are the fees charged by mutual funds, which can be close to 100 times more than this ECN fee. And those fees I just discussed are yearly fees, whereas this ECN fee, this 0.0269%, is just a one-time charge. Now, different brokerages have different fee structures. So Wealthsimple, as an example, doesn't have this ECN fee, nor do they charge commissions for buying and selling ETFs. Well, that does it for another video. We hope you found it informative and helpful. Please like and subscribe and check out mytater.ca, where you can duplicate just about any robo-advisor portfolio out there and cut out all of the fees that would otherwise be paid to the banks and brokerages. And those fees can be 0.5% or more and take a huge chunk out of your investment portfolio. We are talking like 6 or even 7 figures over the long term. So check it out. We will see you next time.